In less than 3 minutes, let's talk about Special Purpose Acquisition Company, or SPAC. SPAC stands for Special Purpose Acquisition Company that is formed strictly to raise capital through an initial public offering or IPO for the purpose of acquiring or merging with an existing company. SPACs have been around for several decades, but they became popular in recent years. Just in 2020, 247 SPACs were created with $80 billion invested. And during the first quarter of 2021, 295 SPACs were formed and raised over $96 billion. So a lot of companies went public through SPAC deals and not an IPO to save time and money. A company going public through an IPO requires a lot of time and money for the regulatory filings with the SEC. A company going public by merging with another company through a SPAC deal is usually faster and saves money by negotiating a favorable price during the acquisition. Here's how a SPAC works. I'm going to use the Beachbody company for example. If you haven't heard what Beachbody is, they're the company behind brands like P90X, Insanity, and 21 Day Fix. In February 2021, the Beachbody company announced a three-way merger agreement with Forest Road Acquisition Corporation and MyX Fitness Holdings LLC, which took these nutrition company and digital fitness streaming public at the same time. Since the Beachbody company was the parent company, the stock was listed on the New York Stock Exchange under the ticker symbol BODY. The companies together at the time were valued at $2.9 billion and added $420 million in cash to the balance sheet. Just like any IPOs, there are always going to be risks with SPACs. These SPACs have been extremely popular at times, but other times not so much. Some of the famous names to go public through SPACs recently are DraftKings, Virgin Galactic, Nikola, and Opendoor. When these popular stocks go public initially, their stock prices will become very volatile when traders come into play. The stock prices can either go up really high or go really low. As I'm making this video right now on November 15, 2021, the Beachbody stock is down over 55% since they went public, and they're down another 20% after hours, I'm guessing because their earnings just came out. The last thing I want you to keep in mind is the lockup agreement for SPACs. A lockup agreement is a legal agreement signed by all the shareholders by a company which restricts them from selling any shares of the company's stock for an agreed period of time. A lot of the IPO's lockup agreement is about 6 months from the day that went public. So if you're a long-term investor, you believe in the company that went IPO through SPAC, you should keep an eye on the lockup period so you could potentially buy the dip when the lockup agreement expires. Thanks for watching. Don't forget to check out these two 3-minute videos as well as the new fire video coming out tomorrow, Sunday at 9 a.m. Have a good one.
Thanks for watching. Don't forget to hit the like button and subscribe for more fire videos.